Next question. The following information relating to Fortune India Ltd having two divisions, namely Pharma Division and namely Fast Moving Consumer Goods FMCG Division have been given to us. Paid up capital of Fortune India Ltd is consisting of 3000 lakhs of equity shares of rupees 1 each. Fortune India Ltd decided to demerge. This is important. Demerge. Pharma Division as Fortune Pharma Ltd with effect from April 1st, 2020. Details of Fortune India Ltd as on 31st of March 2020 and Fortune Pharma Ltd as on 1st of April 2020 are given below. So the information is provided to us for outside loan, unsecured loan, current liabilities and provision, fixed asset, investment, current assets, loans and advances, deferred tax or miscellaneous expenditure. Board of Directors of the company have decided to issue necessary equity shares of Fortune Pharma Ltd of rupee 1 each without any consideration to shareholders of Fortune India Ltd. For that purpose, the following points are to be considered. They have provided 4 points to us. Transfer liabilities and assets at book value. Estimated profit for the year 2020-21 is 11,400 lakhs for Fortune India Ltd and 1470 lakhs for Fortune Pharma Ltd. Estimated market price of Fortune Pharma is 24.5 per share. Average price earning ratio of FMCG sector is 42 times and for pharma sector it is 25 times, which is to be expected for both the companies. There are two questions provided to us. The ratio in which shares of Fortune Pharma are to be issued to shareholders of Fortune India. Expected market price of Fortune India Ltd. I request all of you to go through the question and then we'll discuss how to do it. Friends, first of all, let us have understanding of the question. The question says like this. There is a company called Fortune India Ltd. It has two divisions. One is Pharma Division and another is FMCG, Fast Moving Consumer Goods Division. As per the given information, as far as the Pharma Division is concerned, it is going to be demerged from 1st of April as Fortune Pharma Ltd. It means that, say, the Fortune India Ltd will continue with FMCG Division, like that information is given. It has been provided that the assets of the existing company Fortune India Ltd will be transferred to Fortune Pharma Ltd at book value, and information is given that the new company is going to issue equity shares to shareholders of the existing company. New company is going to issue equity shares of new company to shareholders of existing company for consideration other than cash. Like that information is given. The question says that you are required to compute that say what is the ratio in which shares of new company will be issued to the shareholders of existing company. That is a question. This is what we are required to make the calculation of answer over here. I am reading the relevant portion once again. The question is providing the information like this. Information is provided for Fortune India Ltd having two divisions, Fortune Pharma and FMCG. Paid up capital is provided to us 3000 lakhs of equity shares. Now importantly, it has been given that say the Fortune India Ltd decided to demerge, that is said to segregate Pharma Division as Fortune Pharma Ltd from April 1st, 2020. Details of Fortune India and Fortune Pharma have been provided to us. So all those details have been given to us, balance sheet details. Language of the question is very clear. Board of Directors of the company decided to issue necessary equity shares of the new company of rupee 1 each without any consideration to shareholders of the existing company. And so on, further details have been provided to us. These are some financial details provided to us. The question says that you're required to compute that what is the ratio in which shares of new company will be issued to shareholders of existing company. Please calculate answer on your own and put your answer in the chat box. So let us have understanding that the question is providing the information about Fortune Pharma Limited like this. The question is providing the information that estimated profit is this amount for Fortune India and it is this amount for Fortune Pharma. So we can say that the profit of the company is given to us. It is 1470 lakhs. We do not know the number of shares which they have issued. However, we understand that the profit divided by number of shares will give EPS. Multiplying with the price earning ratio. Price earning ratio for FMCG sector is given and for pharma sector is given. For pharma sector it is 25. Afterwards, information is provided to us about the market price per share of the Fortune Pharma. It is 24 rupees 50 paise. This is market price per share. So what will happen, dear students? We understand that we can compute the EPS as balancing figure. How we can calculate the same? Price earning ratio is MPS upon EPS. So over here, so the earning per share is MPS upon price earning ratio. MPS is 24.5. Price earning ratio is 25. So the final answer is going to be 0.98. So the earning per share is 0.98. Okay. We understand that the EPS can be calculated as earning after taxes divided by number of shares. So number of shares is earning after taxes divided by EPS. Earning after taxes is 1470 lakhs. Divided by EPS is 0.98. That comes to 1500 lakhs. So this can be calculated as balancing figure. 1470 divided by 0.98. This is the way the number of shares can be calculated. So issuing 1500 lakhs shares to shareholders of the Fortune India Ltd, wherein we can say it is 3000 lakh number of shares. So we understand that the ratio will be 0.5. Let us answer the question. First point, in this question, we have been given information about demerger. Second point, We have to compute number of shares of new company to be issued to shareholders of existing company. Full stop. Third, sorry, not third. Now, writing answer directly. Heading it down. Working note number 1, calculation of EPS of Fortune Pharma Ltd. Okay, Fortune Pharma Ltd. We know price earning ratio is MPS upon EPS. This is a formula. EPS is MPS upon price earning ratio. Now, what is market price per share? See, information is provided to us that market price per share is 24.5 and price earning ratio is provided to us for pharma sector 24. So 25. So this is 24.5 divided by 25. It is 98 paise. That is the way the earning per share can be calculated. Working note number 2, calculation of number of equity shares of Fortune Pharma Ltd. In that EPS is equal to earning divided by number of shares. So number of shares is equal to earning divided by EPS. What is the amount of earning? We can see that the amount of the earning is 1470 lakhs. Okay, for Fortune Pharma. And EPS has already been found by us. It is 98 paise. So that gives answer of 1500 lakhs. This is the number of shares that will be issued for, that is by Fortune Pharma Ltd to shareholders of Fortune India Ltd. So with paragraph breakdown, Fortune Pharma Ltd has issued 1500 lakhs equity shares to existing shareholders of Fortune India Ltd. That is what we understand. I request all of you to give answer for the second question. What is expected market price of Fortune India Ltd? So what is the expected market price of the new, that is say Fortune India Ltd? That is the question. Please put your answer in the chat box. So friends, over here we understand, as far as the Fortune India Ltd is concerned, its expected earning is given to us in the question as 11,400 lakhs. So the profit is 11,400 lakhs. Number of equity shares are 3,000 and not 4,500. 11,400 divided by 3,000. That comes to 3 rupee 80 paise. Multiplied with the price earning ratio. Price earning ratio is 42 times for FMCG sector into 42. That comes to 159.6. That is what we understand. This is a simple way by which we can compute the answer. Many a times the students are committing a mistake of taking 4,500 over here, which is wrong. Understand that Fortune Pharma Ltd has issued shares, not Fortune India Ltd. And these shares are issued by whom is important for calculation of the EPS. This is what we understand. Calculation of market price of the share of Fortune India Ltd. In that write down, profit of the company, it is 11,400 lakhs. Number of equity shares, it is 3,000 lakhs. Earning per share, it is 11,400 divided by 3,000. It is 3 rupee 80 paise. Price earning ratio, it is 42 times. Market price of the share, 3.8 into 42, 159.6. That is the way the market price per share of Fortune India Ltd can be found. So we understand that over here, a kind of note I am writing. In order to compute market price of equity share, comma, we will take into account number of shares, 3,000 lakhs. Full stop. We understand that Fortune Pharma Ltd has issued shares to Fortune India Ltd shareholders. Full stop. Number of shares of Fortune India Ltd does not change. This is what we understand.